What a mess. The stock of UnitedHealth Group is down about 50% in 4 weeks. First they had a cyber attack, then they had their CEO killed. They missed their guidance. Now their new CEO says, "I'm out." Maybe he doesn't want to get eliminated. It feels like the entire company is on fire.
She said, "Something ain't right." I said, "Oh man." She said, "Oh man, the building is on fire." I said, "No, what? I got my 3 kids and we bounced out. We ain't gonna be in no fire, not today."
In this video, I'm going to talk about the good and the bad of UnitedHealth Group. Hopefully, this will give us an idea of whether we should buy the stock, hold the stock, or sell the stock. My name is Mariusz Konieczny, and I've been investing in the stock market full-time for 16 years. I'm also the founder of microcapexplosions.com, which is a private membership website for small and microcap stocks. In other words, we find unknown stocks before they become popular. Let's start with the bad. First, the stock price is down about 50% in the last month. Some might think that this drop is because of the unfortunate murder of the previous CEO, which happened on December 4, 2024. That drop was actually short-lived. Yes, the stock price dropped about 20%, but because money doesn't really care about human lives, the stock quickly recovered to almost all-time highs. This most recent drop in the stock started immediately after the announcement of the first quarter 2025 numbers, which happened on April 17, 2025. Let's just say that the numbers did not really satisfy the investors. You see, most investors are not well suited for owning stocks. This is because when you own a stock of any company, you are essentially an owner in the company. Unfortunately, many investors only want to own stocks when the sailing is smooth and the sun is shining. When the business is experiencing any sort of problems, short-term or long-term, they don't want to be owners anymore, and then they sell the stock. The first quarter financial results created lots of doubts. The company said UnitedHealth Group grew to serve more people more comprehensively, but did not perform to our expectations. And we are aggressively addressing those challenges to position us well for the years ahead and return to our long-term earnings growth rate target of 13 to 16%. Few words or phrases that are big no-nos are did not perform, it's never good not to perform. Aggressively addressing those challenges, well, aggressively is good, but challenges is something that investors prefer not to hear. Position us well for the years ahead. Investors would have preferred position us well 3 inches in front of our faces. Who has the time to wait years? And return to our long-term earnings growth rate target means now 3 inches in front of our faces, we don't really have good growth. But the straw that broke the camel's back came yesterday when the CEO stepped down and the company suspended its annual forecast. The stock price went down almost 20% in 1 day. That's almost $70 billion worth of value blown up in a day. And I love how the reason for the CEO stepping down was for personal reasons. Hey, you can't blame the guy for wanting to play with his children or grandchildren. Okay. The sentiment is horrible. People are dumping the stock. The CEOs are stepping down or getting murdered. The guidance is getting suspended. Can there be anything good? Happy people want happy prices. Unhappy people or scared people are more likely to sell you a good business or a stock at a low or unhappy prices. The good thing about UnitedHealth Group is its business and now the price tag or market cap. UnitedHealth generates $400 billion of yearly revenues. The company is also profitable. Cash flow from operating activities is more than $20 billion per year. Considering that the insurance business does not require much capital expenditures, free cash flow is about $20 billion per year. Considering that now, after the drop in the stock price, the market cap is $282 billion, the company is trading for a little bit over 10 times free cash flow. I don't know about you, but I prefer to pay low prices versus high prices. $20 billion of yearly free cash flow is a lot of money. This can create a lot of value for shareholders if allocated properly, like UnitedHealth did over the years. Do you think that this long-term chart of UnitedHealth is a coincidence? This company buys back its shares, pays a dividend, and pays down debt. All of these things benefit shareholders, and this is reflected in the stock price of UnitedHealth in the long term. With that being said, the only reason why you might not be excited about the current drop in the stock price is if you're a current shareholder, or if you think that going forward, and I mean 5 to 10 years from now, not 3 minutes from now, this business will not be growing and generating big cash flows. And to answer this, we need to talk about the insurance business. Let's talk about the health insurance business. Actually, this topic is fresh in my head because I just published a video on Oscar Health, which is another promising health insurance company. Anyway, insurance companies are in the business of collecting premiums from its members or clients, and in return, they promise to pay their medical bills. There's also a lag between the premium payment and the actual claim, so insurance companies can invest this money for investment income. This is called a float.
The insurance business provides us with float, and float is money that we hold that doesn't belong to us. Policyholders give us their money at the start of the policy period, and therefore we get the money paid in advance for the product. And secondly, it takes time to settle losses, particularly in the liability area. If you bang up a fender on your car, it's going to get settled very quickly. But if there's a complicated injury or something, it may take some years to settle. And during that period, we hold the money.
Why do individuals or employers buy health insurance? Because the healthcare industry is so broken in the United States that people cannot afford medical bills when something happens to them. Consequently, they are willing to pay $500 or $1,000 per month in premiums, and in return, insurance companies take on their risk. So the most important question here is, will the need for health insurance go away? Can people just stop buying insurance? That's really the fundamental question that will determine whether UnitedHealth is going to be around in 5 years from now. In my opinion, the only way for people to stop needing health insurance is when they become rich enough to pay for their own medical expenses, or they become healthy enough that they don't need any medical help. And that's never gonna happen. Most people live paycheck to paycheck, and everybody is fat. Therefore, there will always be a need for health insurance. Look, the bottom line is this. UnitedHealth is a company that provides a very important service to its clients. The need for this service is not going away anytime soon. The company is literally printing money. Free cash flow per year is more than $20 billion. Now the stock is cheaper than it was last month. People are selling because 3 inches in front of their faces, there are uncertainties about near-term revenue growth and profitability. If you're a trader or have a 3-minute investment horizon, then Investment Health Group is probably not a stock for you. But if you have a 5 to 10-year investment horizon, then UnitedHealth Group stock looks a lot more attractive today than it did a month ago. That's it. Thank you for watching. Subscribe to this channel, like the video, and watch my other video on Oscar Health.